Good afternoon, Montreal. Thank you so much for having me. I'm Saroop Bharwani, CEO of Senso, and I've spent over a decade building technology for some of the largest banks in the world. And through my experiences, I noticed a growing trend. There's nearly $14 trillion in consumer household debt across North America, spanning mortgages, credit cards, and other credit products. And I was blown away to find out that 50% of consumers are cheating on their banks. Welcome to the switching economy, where a fragmented banking experience is becoming the norm. Take Jane, for example. She has products distributed across multiple financial providers. Now, this wasn't always the case, and despite her primary bank trying to contact her, she was provided more personalized advice by fintechs, friends, brokers, rate comparison websites, just to name a few. This is a growing problem for financial institutions. And if they could somehow solve it, hundreds of millions in cost savings and earnings would be unlocked. If they don't solve it, and players like Amazon get into financial services, and when open banking comes to North America, every banking executive needs to step up and prepare for the biggest switch of all. There has to be a better way for financial institutions to regain trust with consumers like Jane and many others by providing them with proactive and personalized advice to help them make smarter decisions. And now there's a way to do it. Introducing Senso, the consumer portfolio intelligence platform for the financial services industry. We use predictive analytics to tailor personalized recommendations so that banks and lenders can proactively reach out to consumers on their book in the most natural way possible. Here's a glimpse at how we do it. We've anonymously aggregated data from the entire market, from credit bureaus, real estate data providers, and many other data sources. And we use advanced forms of analytics to predict when consumers are about to switch their mortgages, credit cards, and various other products from one financial provider to the next. We then prioritize these customers using a rank ordering algorithm and deliver them to our customers, retail banks, through a globally recognized credit bureau securely and compliantly. Because of this partnership, all our customers have to do is tell us which customers they want insights for, and all of a sudden, sales, marketing, and digital teams will have access to these insights to be able to retarget their customers in the most personalized way before their competitors do. Let's take a look at some use cases. A large Tier 1 Canadian bank is using our platform today, and we're providing advisors with prioritized insights before their customers are about to switch. They know which products they have to retain, and they know which ones they can acquire through creative cross-sell. Another one of our customers is using our insights to target personalized videos to specific segments of customers. The example you see here is targeted to consumers with a high likelihood to break their mortgage because of a property change, and the video actually guides these consumers to help them through the transition. Marketing teams are using our geographic insights to target consumers using hyper-local campaigns in very specific areas based on propensity for them to switch. This is great for running social media campaigns on Instagram and Facebook, targeted at consumers at specific decision points in their product lifestyle, in this case, a mortgage renewal. We're currently monitoring $23 billion in credit volume across multiple Canadian financial institutions. And we're proud to say that we've identified and executed almost 80,000 retention and cross-sell opportunities through high-value customer touchpoints, helping our customers, banks and lenders, target consumers in a much more strategic way at much less cost. Here's the team that's bringing this change. As I said, we have a decade of experience building this exact technology for major financial institutions, and we're excited about the change we're bringing to the market. We're backed by some incredible investors, including the founder of the C100 and former CEO of Tangerine and ING Direct, and amazing Canadian accelerators such as NextAI and Techstars. Senso is the predictive consumer portfolio intelligence platform for the future of financial services. So if you're a lender in the room who wants to maximize wallet share and provide a world-class consumer experience, come chat with us after the presentation about winning in the switching economy. Thank you very much.
Could you talk a little bit about your business model and how you approach the enterprise sales?
Yep. Our business model is not too different from how credit bureaus charge for a credit score. It's per loan per month. And as the amount of coverage scales, more loans means cheaper price per loan.
What are some of the data points that you're using to actually harness these insights? Yep.
So we have as I mentioned in my presentation, we have a partnership with one of the globally recognized credit bureaus providing us with market-wide data. And we basically have this anonymous historical data on our cloud. Majority of it is credit bureau data. We've aligned this with a lot of real estate data. We also have a location data set providing location data about consumers in the market. We've aligned this data set, and the power of our intellectual property is our ability to anonymously understand how those touch points are associated to each other. So those are the three main data sources. We're also starting to work with capacity data, employment, and income data. And this is all data that the customers consented to provide when they acquire the loan.
Quick question from a client's perspective and thinking of the regulatory environment. Can you talk a little bit about how your solution speaks to best interest of client versus best interest of bank?
100%, yeah. So I'm actually excited about the shift that's occurring from a privacy standpoint, looking in the UK, things like GDPR and things like that coming to North America. I'm excited about that. We're a very consumer-centric company, and we actually are taking a leadership role to say to banks, look, it's not only about profitability, you have to provide that consumer experience. If you look at every one of our experiences that we provide, there are experiences that tailor to providing the customer with more value add. And we're going to continue pushing more and more in that direction. In fact, I'm a big believer that consumers should have permission down at the field level over the data points that they continue to share. Some are going to be mandatory when it comes to loans and everything, but they should have transparency around what they're going to be giving up by opting out of a specific data point. And I think things are going to go more and more in that direction, and that is something that I'm totally excited about, and our mission is to enable banks to act more in accordance with that.
What is your major issue and how you can solve it?
The major issue?
That you have in your corporation right now.
What's the major issue right now? One of the hardest things that, one of the biggest problems we've had to solve is aligning data anonymously throughout the market. We've been lucky enough to have partners that have done that behind the scenes, and we use specific key identifiers that all of our partners have to enable that. I think that one of the uncertainties is a lot of the stuff that's going on in the other market related to open banking and privacy that are eventually coming to North America. I think that those uncertainties, we're sort of steering our company in a direction that is not only compliant with how things are going to be, but also the right thing to do for the customer. And I think that uncertainty is something, as a startup, you know, we do have uncertainties, but that's something that we're paying close attention to.
Can you talk a little bit about your go-to-market strategy? Are you mainly focused in Canada today or thinking internationally?
Yeah, so we definitely started in Canada. We're staying, as a company, we're committed to staying in Canada, but look, now that we're working with a number of financial institutions and we know that this works in our market, our eyes are set on the US market. I just went to Money 2020 last week and I presented there, and I think the opportunity is exponential there. Just the reaction I got from many of the community banks in wanting to use these, not having those internal capabilities and just needing these insights in a seamless way where it's sort of out of the box is what they're looking for. It's low touch point, low investment on integration, but they get the insights to be able to actually compete against some of the bigger lenders.
How do you distinguish yourselves from your competition?
Competition? Look, I think that there's a lot of companies that are providing insights to enterprises and they're slicing and dicing it in different ways. I think that there's a lot of incumbents doing this too, namely like companies like Black Knight Financial. Nomis provides price optimization solution, and that's a big part of what we do, price optimization and sensitivity around price optimization. I think there's a lot of AI companies out there that are coming out of the woodworks, and you know, I think some of them are complementary and some of them are competitive. There's companies that are offering insights straight to consumer that are developing insights that can be relevant to banks. There's one in particular in the US called HomeBot that I'm keeping my eyes on pretty closely, and it's questionable on whether they're competitive or whether they're complementary. And these are always things that, as a startup, we're keeping our eyes close on. I always like to think of it as complementary and a potential partnership. That's just the way I am, but yeah, great question.
Thinking of your business model, what's the next investment you need to make to scale effectively?
The next investment, so right now, literally it's just, there's two parts of our business model. One, charging for the insight, and then because we can close the loop, the report on that, right? One big request we've had from financial institutions is actually, how can we facilitate the referral through different silos within the organization? I'll give you an example. We started working with the mortgage line of business at a large financial institution. We identified credit card insights that the mortgage advisors could essentially consolidate debt on. Credit card department comes by and they're like, well, that's the part of business we own. So it's exciting because we're breaking down silos in the organization, and those referrals, not only within the organization, but inter-organization. For example, a subprime lender we're working with, certain consumers graduate naturally. They become prime candidates. They actually want to refer those to prime lenders, and the facilitation of that is something we're well positioned to do so.
I'm really sorry, but I'll have to be like the bad person here. Please,
Thank you. Thank you so much. I appreciate it.
Thank you very much. Thank you.